Bitcoin just dropped 47% from its all-time high. The fear and greed index has been in extreme fear for 46 straight days. And everyone is asking the same question. Is this the crash? Or is this the buying opportunity of the year? Let me break down exactly what happened, why it happened, and what you should actually do right now. 6 months ago, Bitcoin hit a new all-time high of $126,000. It seemed unstoppable. Institutional money was flooding in. Fidelity was writing research notes about Bitcoin. Wall Street had finally shown up. Then, 5 things hit at the same time, and the market collapsed. First, trade war tariffs. The Trump administration rolled out aggressive tariffs that spooked global markets. When traditional investors get scared, crypto gets sold first. Second, the Iran conflict escalated again. Geopolitical risk sends investors to cash and gold, not Bitcoin. Third, AI stocks started getting hammered. The big tech sell-off dragged crypto down with it because institutional funds that hold both started de-risking their portfolios. Fourth, the Fed didn't cut rates when the market expected them to. Higher rates for longer means less speculative money flowing into assets like crypto. Fifth, a record $13.5 billion in crypto derivatives expired in a single day, triggering forced liquidations that turned a dip into a full crash. 5 macro hammers hitting simultaneously. That's why $126,000 became $67,000. Now here's what Fidelity's own analysts said this week. They published research noting that Bitcoin's crash cycles are getting smaller every time. In 2013, Bitcoin crashed 87%. In 2017, it crashed 84%. This time, 47%. The crashes are compressing. That's a sign of a maturing market. More institutional holders who don't panic sell, deeper liquidity, more long-term conviction. Not everyone agrees. Bloomberg's Mike McGlone is calling for Bitcoin to drop all the way back to $10,000, saying the crypto bubble is over. He's been saying versions of that for 3 years. So what do you actually do? If you already hold Bitcoin, the historical pattern is clear. Every major crash in Bitcoin's history has been followed by a new all-time high within the next 12 to 18 months. The people who sold at the bottom of every previous crash are the ones who regret it most. If you're thinking about buying, $67,000 is 47% below the all-time high. You're not buying at the peak. Whether it goes lower from here, nobody knows. But dollar-cost averaging into a position over the next few months has worked in every previous cycle. If you're staying out, that's a valid choice too. The macro environment is genuinely uncertain. Tariffs, geopolitics, Fed policy, these aren't resolved yet. Staying in cash isn't weakness, it's a position. The one thing you shouldn't do is make decisions based on fear. The fear and greed index at extreme fear for 46 consecutive days isn't a signal to sell. Historically, that's exactly when the best buying opportunities appear. Bitcoin at $67,000 in April 2026. Whether you buy, hold, or wait, know why you're making that decision. That's all investing actually is.